The big question is how to create a bank. Yes, you must understand blockchain. Cryptocurrencies, as they are now, are raising very serious risks, questions, and concerns. The winning formula will be hybrid. Humans and intelligent machines working together. Intelligent machines soon can become more intelligent than humans.
Today we are presenting the second part of the interview with David Gyori, CEO at Banking Reports and one of the global opinion leaders in FinTech. We are going to talk today about digital banking, FinTech trends, future of payments, AI and gamification. Many people criticize traditional banks for being too conservative. Are there any counterexamples of innovative banks keeping up with the times and trends, which are not inferior to FinTech companies in terms of speed and innovation?
So basically, in terms of excellent digital banks, it is a little bit dangerous to name specific examples because, for example, the speed is probably a negative in banking. Banks must be careful, and in fact, disruptive cycles are slow cycles. Clayton Christensen, the legendary professor of Harvard Business School, has described that a disruptive cycle, a time scale to disrupt a traditional market, is approximately 10, 15, 20 years long. Now, disruptive innovation needs large investments over a sustained time scale. So in the first 3, 4, 5, 6, 7, 8, 9, 10 years, your disruptive investments are typically not profitable. So banks, in fact, have learned that they are slow. Therefore, top management, shareholders, when they hear about disruption, they think they have to speed up. They think they have to be much, much, much faster. In fact, it's a huge mistake. It's a $1 trillion trap. In fact, when it comes to disruptive innovation, banks should be slow. When it comes to efficiency and sustaining innovation, efficiency innovation is cutting costs by automation, cutting costs by using technology. Sustaining innovation is step by step, little by little, innovating for our existing clients. So when it comes to efficiency and sustaining innovation, speed is okay, but the big important thing on table, disruptive innovation, is actually better when it's done slower. So instead of shining examples, what we are looking for is silent, less shiny, but strategic change. And here is something very important. When I talk about strategic change, there are now dozens and dozens of new technologies emerging within financial services. And instead of being excellent in 1 or 2 or 3 of these, the big question is how to create a bank that is excellent in technology in general. A bank that is excellent in being selective, in adopting, in implementing and in disruptively delivering and managing new technologies in general, regardless of which specific new technology we are talking about. I call it the meta-technologic state of banking. Yes, you must understand blockchain. Yes, you must understand artificial intelligence. Yes, you must understand augmented reality. Yes, you must understand behavioral biometrics. Yes, you must understand the implications of quantum computing in finance. Yes, you must understand how new core banking systems are different compared to legacy core banking systems. Yes, you have to understand how voice banking can bring new solutions to your customers. Yes, you must understand how big data can bring big additional value. Yes, you must understand how regulatory technologies can help you to comply, and so on, and so on, and so on. But the name of the game is to understand how to win cycles of new technologies in general. And that is a strategic question, and that is much less shining than standalone examples of public relations propelled innovations communication, which is beautiful, which is legitimate, but what we want is silent, much less loud, much less shining, more silent, more calm, but in-depth strategic transformation. We don't want to create a bank which is the champion of blockchain. We want to create a bank which is the champion of every single technology that it perceives as important. We want to create a bank that is excellent in adopting whichever technology it wants to adopt.
Let me remind you, my name is Denis Astapchenia. I'm head of financial technologies at Andersen IT company. Our research and development department works on the content for this channel and also collects the best practices of fintech software development. You can view the examples of such case studies on our website. The link is in the video description. If you need to go digital, cut operational costs, or automate your business processes, we will offer the best possible solution for a business case. Contact us. One of our guests was Paolo Cironi, and he said that only those financial institutions that would shift from the product-oriented economy to the result one, where the product is relationship with the client, could become successful. What do you think about it? Are relationships really worth more than products today? And the most important thing is to earn the trust and loyalty of customers.
Okay, trust has always been the number one value creator in banking. The big question is how to create, how to earn, how to maintain, how to preserve, how to sustain, how to cherish this trust in a digital first or digital only world. Can you remember participative benefits? For example, having your clients and potential clients and ex-clients and wannabe clients active in communicating with you as an institution and with each other as clients, potential clients, wannabe clients. This is creating trust, even if this communication is often critical. And actually, the big question is how to build more and more, stronger and stronger, and persistent, sustainable trust in this digital-only environment. This is the basis of this relationship. And the second level is that customer experience is basically the new banking product. And customer experience is basically the new banking product because customer experience in a digital-only environment is very similar to user experience. User experience in a digital-only environment is very much predetermined by the quality of the interface. This is why now we talk about design in banking. This is why nowadays we talk about design of a banking interface. 20 years ago, it would have been totally irrelevant and bizarre and strange to talk about design in banking. But in a digital-first world, user interface determines user experience and design determines the quality of user interface. Steve Jobs was one of the first people to recognize this, and Steve Jobs even had a quick test to differentiate between good and bad interface design. What was the elevator test, quick test of Steve Jobs to differentiate between good and bad interface design? Steve Jobs said, a good interface is an interface which you can use the first time you see it, and you can teach the second time you see it. You can use it the first time you see it, you can teach it the second time you see it. Teaching it is to explain it to someone else in a structured, conscious way. And indeed, the best interfaces like the Google search window, for example, match this criteria. What is the thing that most of us, most people can use the first time they see it and can explain to other people the second time they see it? Well, for most of us, what we can immediately understand and what we can almost immediately teach is something super simple. So the Steve Jobs test of superior interface, by definition, is something very simple, like an empty rectangle in another empty rectangle. What is an empty rectangle in another empty rectangle? Google search window. What is Google search window? The most successful interface ever created in human history.
Okay, David, let's move to the payments. The success of UPI in India and Pix in Brazil is putting pressure on the launch of FedNow in 2023 in the US and P27 in the Nordic countries to accelerate mass adoption worldwide. So does this mean that real-time payments are approaching a tipping point on their path to mass adoption? And how do you see the future of digital payments?
Payments are essential for successful disruption in financial services. The new model will be superior digital-only onboarding, a great onboarding experience, compliant, but highly successful in terms of satisfying the users, not distracting the users, an easy, fun, but fully compliant onboarding process. Payments. These payments are new type of payments. These payments don't cost money for the users. these payments are in fact generating additional value for the users. And this additional value is paid by the value of data, which the users are generating for the payments services providers. Now, how can this data be monetized? How can this data be used for value creation? The two ways to use this data, payments-based rich data for value creation, is to sell this data, to directly monetize it, or this will be the very important and very beautiful new model of financial services, to use this data to build assets and liabilities, to use this data to provide active and passive financial products to the users. And why is it good to provide active and passive financial products to the users? Because loans and deposits have interest rate margin between them, and this net interest rate margin has historically been the number one profit driver in banking across the globe. So, banking will return to the good old traditional profit driver, net interest rate margin, propelled by assets and liabilities, propelled by rich payments. What is rich payments? A lot of data, high volume, high velocity, high variety of data in payments, propelled and enabled by a strong state-supported digital identity catalyzed onboarding process. Now, the big story is that local payments, local currency, domestic payments are heading to zero in terms of their direct margin. Real-time, high-frequency retail payments are becoming free for users, for merchants, for every stakeholder. There is no margin in it. Later, 10, 15 years from now, cross-border, cross-currency payments will have much less margins compared to current reality. Payments are actions of communications. In fact, payments are actions of telecommunications when it comes to digital payments. That's why we see so much analogy between chat and mobile wallets, WeChat Pay, Venmo, and all the other examples. And because these payments, especially the retail payments, are acts of telecommunications, they will behave in an analogic way to telecommunications. For example, Moore's law. Gordon Moore just died 2 days ago. He was 94 years old, one of the founders of Intel. And Moore's law, the cost of computing and the cost of telecommunications going exponentially down, approximately 50% in nominal US dollar terms year by year, will perfectly apply to modern payments. So basically, modern payments behave like acts of telecommunications, and therefore their margin will behave like the margins of telecommunications. And where did the margins in telecommunications go? First local phone calls, 0, then international phone calls, 0, and what remained as a value creator in telecommunications? Data. Data remained as a value creator in telecommunications. And the same is going to happen to payments. Now, how are we gonna get more data, richer data, better data in payments? For example, P27, the Payments Union, the Payments Cooperation of Nordic countries. Well, P27 is actually built around ISO 20022, and ISO 20022 is the new global standard in payments. ISO 20022 is like virtual reality compared to black and white television. So a whole new dimension of payments data. Geolocations, yes. Attached picture, yes. Attached voice file, yes. A lot of rich data connected to each and every piece of payment, even if it has been a micro payment, just 1 euro cent or 1 euro. You can make it rich in terms of data. And this new standard, national and international, ISO 20022 is the first payments standard which will equally apply in most countries around the world nationally, as well as in the Society for Worldwide Interbank Financial Telecommunications, better known as SWIFT, internationally, cross-border, cross-currency wise, in terms of interbank payments. So this is a whole new age, a whole new era of data in payments. And when I say ISO 20022, that is just the first step. The real big bang will be R3. R3 as a blockchain alliance where 100 of the largest banks globally are cooperating in a consortium headquartered in New York, creating a distributed ledger called Corda and putting the future of payments on this distributed ledger. Probably R3 blockchain alliance with Corda as a distributed ledger will be the midterm or long-term future of central counterparty payments led by SWIFT. By the way, SWIFT was established in 1974, late 1974, early 1975. ISO 20022 is an amazing innovation, a whole new level of payments data. We will see how it will measure to the truly disruptive new paradigm of R3 and blockchain-based payments. By the way, in our discussion, you can recognize that I am a big supporter and big fan of blockchain, distributed ledger technology, while I am the most negative person globally, one of the most negative people globally, on cryptocurrencies. Let's all recognize that these two things are independent. Blockchain is a safe, meaningful, and compliant technology. Meanwhile, cryptocurrencies, as they are now, are raising very serious risks, questions, and concerns.
12 years ago, banks began to actively implement gamification, and today gamification offers investment instruments, gives advice, helps to take loans, and so on. So in 2021, the global gamification market was about $10.5 billion and expected to reach 97 billion by 2030. What is the top trend in banking gamification now? And will it one day turn wallets and apps into real games?
Well, it's happening. Basically, as we have talked about it, customer experience is the new banking product. But by the way, this statement comes from Brett King. This is his line of thought, and I truly and deeply agree with him. So customer experience is the new banking product, but customer experience in a digital-first world is predominantly defined by user experience. User experience is defined by the quality of the interface, and already the most successful interfaces attracting millennials and Generation Z are using the design language of smartphone games, computer games, console games. So the design language is already there. The great question is how to take it one level higher, how to make gamification from a passive design language level to an active and proactive, transactional, dynamic level. How to turn finances into sort of motivational games. How to turn finances into educational games. And what we see is that there are certain good ideas. For example, one of the credit unions in the United States put large touch screens on the windows of its branches, and these large touch screens are facing the street, so people can stop, play a game related to their products, and actually, based on the points they are getting in these games, they are getting benefits from the credit union in case they are a client or they become a client. Or a KBC Bank in Belgium, the leading retail bank in Belgium, has created a virtual reality branch, a three-dimensional navigational VR branch, and in that branch you can learn about products as a client, you can learn about cybersecurity as a client, you can learn about responsible financial management, personal financial management as a client, and as you are taking lessons in this VR branch, sitting in your home comfortably in a sofa, any time of the week, any time of the day, you are gaining points, and with those points you are gaining levels, like in a computer game. And there are many other examples, such as Ant Forest, which is a basically national, environmentally conscious spending motivator in China. If you spend money through your Alipay wallet in a way that is environmentally conscious, and if you do environmentally conscious things, you receive an ant forest point. And when you have 100 ant forest points, you can cash it in and you get a real tree planted. And across China, hundreds of millions of such real trees have been planted through this Ant Forest project. And it's a dual engine of environmentally conscious spending, because you receive the Ant Forest points for your environmentally conscious behavior, and then you use the Ant Forest points to plant trees. Gcash in Thailand has implemented a very similar project, and they are highly successful. They have planted hundreds of thousands of trees across Thailand through this financial services gamification.
David, I know you really like speaking about AI. And AI is definitely getting more and more successful in working with big data and financial statistics. So will advances in AI engineering allow us to shift to financial companies fully managed and maintained by AI? And will this give the technology a competitive advantage over human managers in the financial market? Do you think a bank of the future may be like a driverless car?
Wow, this is a great question. And I believe that the winning formula will be hybrid. Humans and intelligent machines working together. One thing is sure, intelligent machines will be so efficient, so skillful, so to speak, so clever, so intelligent, that they will have their own assets and liabilities. Robots, algorithms, artificial intelligence solutions will be clients of banks for sure. They will have their own bank accounts. Not only humans, but also intelligent machines. Just like currently we have bank accounts for natural people, private people, as well as legal entities. We will have a third type, machines, intelligent machines, owning money, spending their own money, or in fact managing the assets, managing the wealth of others. Now, banks purely run by machines will be for a long time, probably hundreds of years ahead, statistically inferior to hybrid banks. Banks run by people and machines together. Banks run by human intelligence and artificial intelligence meaningfully combined. Because human intelligence and artificial intelligence meaningfully combined is a competitive advantage to only one of the two components. Using these two vectors, we can go ahead better than using only one of these vectors. And so we will have machine banking, which will mean machines as clients of banks. Imagine machines having a bank account with balance, with savings, with their own investments, with their own insurance, with their own assets and liabilities. Imagine banks taking a loan. Imagine risk management in providing credit to banks. So imagine banks providing credit to machines. machine clients. Imagine banks providing investment services to machines. Now, some of those loans will be evaluated by AI algorithms, and some of those investments will be managed by machines. So there will be machine-to-machine banking. Artificial intelligence propelled algorithms providing financial services to other artificial intelligence propelled algorithms. However, the strategic overall winning formula, the strategic optimum, the strategic equilibrium, the strategic sweet spot will be humans and machines cooperating, working together. By the way, this is a new challenge for HR. This is a new challenge for education. How to learn to work together, to cooperate in the most efficient, most productive, most profitable, most optimal way with intelligent machines. How to communicate with intelligent machines. What kind of colleagues are intelligent machines? How can we relate to the wealth, assets and liabilities of an intelligent algorithm? AI lawyers are already winning court cases. AI designers are already designing interiors of airplanes and other things. You know that now there is a boom in AI. Actually, we are in the most advanced level of artificial intelligence before general artificial intelligence, or artificial general intelligence, or AGI, as we call it. The next step in artificial intelligence is artificial general intelligence, and that is a whole new universe. That means intelligent machines. Intelligent machines soon can become more intelligent than humans. Why? Because they are learning faster. AlphaGo, the genetic algorithm propelled machine learning AI, deep neural network algorithm playing the 4,000 years old game of Go, has learned to play Go better than the current world champion from South Korea in 4 hours than humanity has learned in 4,000 years. And what was the reaction of the current, apologies, human world champion of Go? He retired. He retired because he said, what is the reason to play if machines are so much better? By the way, to a lesser extent, the same is happening in chess. You know that chess algorithms have been beating human players, the best human world champions, for a long time. But now the gap between algorithms and humans is so wide that actually there are all sorts of conspiracy theories that a certain player or some players have tried to take advantage of this gap in a non-compliant way. Anyway, once artificial general intelligence surfaces, it will probably learn significantly faster than humans. And if it learns significantly faster than humans, then we will reach the point of singularity. The point of singularity is the theoretic point where humans and machines are equally intelligent. And what will come after the point of singularity? The age of machine superintelligence. Why? Because machines reach the point of singularity on a steeper, faster learning curve. So after the point of singularity, machines will become more intelligent, presumably, than humans. And the big question is how humans can cooperate with these super intelligent machines. What is the answer of Elon Musk to this existential question? The answer of Elon Musk is to potentially implant microchips into the brains of humans to physically combine the advantages of human intelligence and machine intelligence. Elon Musk says humanity can only survive the age of machine superintelligence if humans combine the two. What do I say? I say yes, we must combine the two, but not physically implanting microchips into the brains of human beings. By the way, what is physical implantation of microchips into human brains? Cyborgs, transhumans. I say instead of cyborgs, instead of transhumans, we can have intelligent machines, we can have intelligent humans, and we can work together.
Machines will become bank customers one day. So will machines and robots driven by AI pay taxes?
Very good question, very important question. Probably for competitive neutrality, for competitive reasons, for market competition paradigms, they will have to pay equal tax as humans are paying. So when machines will be serious competitors of human intelligence, they will have to be equally taxed. Very good question. By the way, this issue of having to necessarily tax intelligent algorithms, this will raise a very important question. How to restructure the personal tax system and our logic and architecture of tax systems even beyond personal tax in a way that we can tax machines in a meaningful way. So basically, the need to tax machines will put a pressure on serious reform in personal income tax structurally, because we will have to rethink what kind of way we can meaningfully tax algorithms and humans alike, parallel.
David, I know you read a lot. What books about banking and financial technology would you recommend to our viewers and listeners?
Let me please recommend the new book of the CEO of the Asian Banker Group. The CEO of the Asian Banker Group is Emmanuel Daniel, and he wrote a book about the new age of personalization in banking. And this book has been recently published. Actually, it's a very, very, very deeply practical and deeply philosophical book. So the new book of Emmanuel Daniel, the CEO of the Asian Banker, is absolutely a must read, with amazing analogies, with really best in class insights into the past as well as the future of banking. I want to recommend all of the books written by Brett King and Chris Skinner. I also want to recommend the books I am co-author of: the FinTech book published by Wiley, the AI book published by Wiley, the Paytech book published by Wiley, and the Wealth Tech book also published by Wiley. I am co-author of another book on wealth tech, the future of wealth management, that has been published by IAP Publishing Company in the United States. I also want to recommend the books of Paolo Cironi. Paolo has been interviewed by you. Excellent, amazing choice, the best of the best. Paolo is a very special expert. He has deep-rooted ties in world-class risk management, as well as investment banking, as well as financial technologies, as well as retail banking. This is a unique combination of strategic insights. I also want to recommend every book. Susan Chisti is the editor of. Susan Chisti has edited an amazing series of books. She is the CEO and founder of FinTech Circle, an amazing community of global financial technology experts. I also want to recommend an amazing book by Ken Rogoff. Ken Rogoff is the professor of Harvard University, and he has written an amazing book titled The Curse of Cash. I also want to recommend the amazing book of Clayton Christensen on disruptive innovation. Actually, this is one of the best books ever written. And in order to understand the profitability, balance sheet, valuation, growth implications of investing into banks, investing into fintech, I want to recommend the classic, the favorite book of Warren Buffett and Charlie Munger, The Intelligent Investor by Graham. These are all books I can absolutely recommend to everyone. By the way, one more. Ann Bowden, an amazing banker, the CEO and founder of Starling Bank, exactly, has written a book titled Banking on It. And the subtitle is How I Disrupted an Industry. It's an amazing book. I have read it 4 times. I have taken detailed notes. Honestly, Banking on It by Ann Bowden is a recipe to create a world-class digital bank.
David, thank you very much for talking to Andersen.
Yes, thank you very much, Denis. And I have watched some of the past interviews in this series, and I find it highly inspiring, and I find it very, very, very important in terms of the future developments of the financial services ecosystem internationally. Your interviews are in depth, and your interviews can actually provide the level of insights which can not only analyze or describe how things are happening, but in fact they can inspire and catalyze and power the things going forward. So congratulations for creating this amazing series, and it is a great honor to be part of it, to contribute to it.